Could the real estate market be the next area to face significant challenges similar to what we saw with the banking industry?
The challenges in real estate are going to be tied to the economy. So it all depends on, do we have a recession? How deep will the recession be? How long will interest rates be high? And the answer to that question will determine, the challenges that the real estate industry will face in the quarters ahead.
According to a Bloomberg report, office vacancy rates in Manhattan are currently at a record high, possibly around 50%. It's unclear how much of this is due to the economic downturn versus the trend of people working from home.
Yes, I think that's a big misperception in the market today. The office business faces two significant headwinds. One is a slowdown in economic conditions, and the other is work from home. When you have a slowdown in the economy, businesses are more challenged in terms of their P&L, and they do things to cut costs. And you see layoffs going on almost every day right now. And as you have layoffs, companies take less space, or they put sublease space back on the market. And by the way, this is no different than any other downturn that we've ever experienced. Office and many forms of real estate are economically sensitive. So I think in the premium end of the market, what's impacting our leasing activity today is much more the economic conditions than work from home. And the evidence of that I would give you is in 2022, last year, our company leased nearly 6 million square feet of space, which is basically at 95% of our long-term averages. And if you think about it, last year, interest rates that started to go up, but the economy was much more solid, and there were a lot fewer people in the office. Now you move to 23, office leasing is slowing down, the economy's worse, and there are actually more people working in the office.
I'm curious to know your first-hand experience with BXP, especially in regards to the tech sector. There have been reports of layoffs and downsizing in the tech industry. Have you noticed any such trends in your office situation at BXP?
Yes, well, that has an impact. The technology firms, particularly the larger ones, were important net absorbers of office space since the global financial crisis. And as you know, over the last 6 months, many of those companies, their growth has slowed, and they're focused very much on their profitability. And many of them have done layoffs, and many of them have put sublease space on the market. And by the way, they've all announced some form of return to the office as a result of this as well.
Can you explain how the current situation is affecting real estate valuations? We have a Bloomberg index which has seen a significant decline than appraisals. How can we accurately assess the state of real estate valuations?
So let's divide it between the private market and the public market. On the private market, it's hard to determine value because there are very few transactions going on right now. Interest rates have come up, bids are lower, and sellers are so far unprepared to accept those bids. So where is real estate trading? It's trading in the public market, the REITs, as you mentioned. And if you compare these two areas, office REITs today are off 50 plus or minus % from peaks in March of last year. But the NIKKEI index, which is appraisal-based that dictates where private market values are, it's only down about 5 to 6% from peak.
Higher interest rates can have an impact on the economy, potentially slowing it down and affecting vacancy levels. They also affect financing for properties. If you're constructing a new building, for example, you likely have short-term construction financing, but will need to refinance for a longer-term loan later. How is the current interest rate environment impacting real estate financing?
Yes. Well, financing is harder to get today because of concerns about real estate, and also buildings have to have strong cash flows to support the higher interest rates that are associated with financing. From our company's standpoint, most of the financing we do is in the bond market. So we're an investment grade issuer of unsecured bonds, and that market is open to us, albeit at higher spreads. We do have some mortgage financing, and I do think mortgages are available to office real estate, but the building has to be well leased, it's got to be of high quality, and it has to be owned by a strong sponsor.
You mentioned high quality buildings, but I've heard conflicting reports about the differences between A, B, and C grade buildings. Can you clarify the impact of building quality on the current real estate market?
Yes, no, this is a very important issue when you think about office real estate. Last year, I mentioned all the leasing success that we had, yet we saw all these reports showing many of our cities being 15, 20, 25% vacant. And then an important measure in office real estate is net absorption. This is how much the occupied space goes up and down in those segments. And if you look at the premier workplaces for the last 2 years, ended year-end 2022, the premier workplaces had a positive 7 million square feet of net absorption, where everything else was down 25 million square feet. So there's in all the years that I've been doing this is one of the strongest moves towards quality office and real estate that I've seen.
What is the current state of the market in prime cities? For example, we've heard that San Francisco is struggling, while there's a trend of people moving to cities like Austin and Miami. How does this geographic dispersion impact the real estate market?
Well, there is some migration out of the coastal cities into lower tax states and cities like in Florida and in Texas, but there's also in-migration from employees in New York and San Francisco as well. So I do think and believe in the long-term vibrancy of cities like New York and Boston and San Francisco.
Are companies like BXP scaling back on future development projects, which can have an impact on construction workers and employment? How is the current situation affecting real estate development?
Well, with the slowdown in demand, clearly there's going to be a slowdown in development. And that's one thing that'll help owners like ourselves, because there's going to be less supply in the future because construction's being pulled back. We do have sites and we would consider future development, but it has to be de-risked. And for us, that means pre-lease.
What do you see as the biggest opportunity for BXP right now? Is the current state of real estate valuations creating opportunities to find bargains in the market?
No, I think that will come. I mean, a couple of things I would mention. We have also been, in addition to our premier workplace business, we've also been developing life science assets. We're building a large lab building for AstraZeneca in Cambridge. We're converting a large building in Cambridge for the Broad Institute, so that's an area of growth for us. Another area of growth for us is simply leasing our portfolio, increasing the occupancy, because we're at about 88 or 89% occupied today, and that will grow our income stream. And then I agree with you. I think as this downturn unfolds, I think additional investment opportunities will present themselves to strong players like ourselves.
Real estate faces risks from economic downturns leading to lower demand for office and commercial space, layoffs, and subleasing. Tech firms have also slowed growth. Uncertainty makes it hard to value real estate and obtain financing. The trend of remote work is impacting the demand for office and commercial space, leading to lower absorption rates. Many companies are adopting remote work policies, which means they may require less office space or none at all, which may lead to vacancies. Higher interest rates can lead to higher financing costs for properties, which can reduce the demand for real estate. Additionally, the uncertainty surrounding interest rates can make it difficult to obtain financing, as lenders may be hesitant to finance a property if they expect interest rates to increase in the future. The quality of a building affects its absorption rates, which is the rate at which available space is leased or sold. If a building is outdated, poorly maintained, or lacks modern amenities, it may be less attractive to potential tenants, which could lead to longer vacancy periods.